Closing bell has rung on Wall Street, and we wrap up a session that left the market coiled like a spring. The S&P still stuck in its range, but with bears increasingly on the back foot and pockets of growth and policy drama driving the conversation. I'm Grant Mercer, this is Storm Stock Solutions, and as always we're here to bring some clarity to the chaos in today's markets. Let's start with the big picture read on the tape. According to analysis highlighted by MarketWatch, the stock market right now is poised for a breakout, or a breakup. Bears have clearly fumbled control over the last stretch. Selling pressure hasn't been able to crack the major indices lower. But at the same time, the S&P 500 is still ranging bound, grinding sideways as traders debate whether the next move is a decisive leg higher or a rejection from resistance. That tug-of-war framed the entire session. Cautious optimism but no all-clear signal. On the upside, one of the more notable pockets of strength came from the AI and chip complex. MarketWatch reports Nvidia and other semiconductor names caught a bid after Micron offered a more upbeat outlook on AI demand. That lifted sentiment across the board in that theme. However, the coverage is very explicit. Today's bounce doesn't mean the AI trade is back for good just yet. Many pros see this more as a reminder that fundamentals still matter and less as the beginning of a new secular leg. A more sustained catalyst may not arrive until next year, when we get clearer capex plans from big cloud players and fresh product cycles from the chip makers. We also saw some fireworks in cannabis. According to reporting from MarketWatch, President Trump signed an executive order asking the federal government to reschedule cannabis, a move analysts are calling the most significant federal reform on the substance in decades. Cannabis stocks, though, finished the day mixed. That's a classic example of buy the rumor, sort out the details later. The long-term regulatory overhang may be easing, but traders are now wrestling with timelines, implementation, and what this actually means for profitability and banking access. It's a policy-driven space that can move fast in both directions, and today you saw that volatility. On the downside and the risk column, the bond market is the quiet elephant in the room. MarketWatch's Vivian Liu Chen points out that bonds are having their best year since 2020, a huge turnaround from the pain of the prior rate hiking cycle, but the outlook for next year is much less friendly. With inflation and interest rate policy still uncertain, there's a real risk that yields could drift higher again in 2026. Which would weigh on bond prices. That's why you're seeing a more selective tone in long-duration assets. Growth and tech can rally on good news, but underneath, pros are very attuned to the idea that you can't simply extrapolate 2025's bond returns into the future. Macro and policy didn't stop with bonds. That same cannabis executive order is now part of the broader policy landscape traders are mapping out into the election cycle and beyond. And there's a labor market undercurrent in the headlines as well. One MarketWatch piece asks, when retirees go back to work, is that a sign of a strong labor market with lots of opportunity, or a sign of economic stress that's forcing people back into jobs? Those unretirements can color how investors think about consumer strength, wage pressure, and the odds of a slowdown. Now, let's talk about sleepers and the bigger picture watch list. Not recommendations, but themes to keep on the radar. One is the political calendar. MarketWatch's Isabel Wang walks through how stocks tend to behave in midterm election years, and notes that 2026, a quirky midterm setup, has historically created opportunities after periods of volatility. Again, this isn't a call to act right now, but it's the kind of pattern many professionals file away as they think about positioning over the next 12 to 24 months, especially if we see choppier performance around the election. Another sleeper theme, the human side of AI adoption. A column from MarketWatch argues that threatening to fire employees if they don't embrace AI tools is exactly the wrong way to drive adoption. For markets, that's a subtle but important point. AI winners may not just be the companies with the best models or biggest data centers, but the ones that manage culture, training, and workforce transition intelligently. That's not something you'll see in tomorrow's earnings, but over the long term, it can separate execution leaders from laggards. And finally, there's a structural story around savings and capital flows. MarketWatch reports that Ray Dalio is the latest billionaire to commit funding to Trump accounts for kids, investment accounts for American children slated to launch in 2026. If these accounts scale, they could change the rhythm of retail investing and long-term capital formation in the background of this market. Again, not a trade for Friday's open, but a slow burn development that investors are starting to track. Looking ahead to tomorrow's session, the key questions are straightforward. Does the S&P finally break out of this range, or does it respect resistance once again? And does the bond market narrative start to bite more into risk appetite? Traders will also be watching whether today's AI and cannabis moves see follow-through or quick reversals, and how new data points fit into that ongoing debate about the labor market and growth. We'll dig into all of that in our next pre-open update, and we'll keep cutting through the noise as this breakout or breakup setup resolves. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,